I'm Anu Narula and I head up the global equity team at Mirabaud. Services are now 40% of world trade, and services have been growing as a share of the economy for many years. So why now? What we believe is we're at an inflection, particularly in the emerging markets, when areas such as China, services are now over 50% of GDP. So there's been a big shift away from manufacturing and hard fixed investment towards services. And we like the nature of these companies' revenue streams, where they've got long-term contracts, recurring revenues with pricing increments that are fixed in. So very what I call visible revenue and profit streams. So new areas are definitely emerging. Travel has become a much bigger contributor in the last few decades as low cost and value travel has emerged, be it Ryanair or EasyJet that we're all familiar with. And this has enabled new generations to travel, and the millennial generation in particular, love to travel using the value airlines. But other areas such as insurance, they all need the kind of analytics that comes around the service economy. So that is an area that's growing as well. So it just reiterates that move away from hard fixed asset investment towards a non-manufacturing service economy. So we see that there's more of a global opportunity for the companies. Two names that we own are Verisk and Ecolab. And with the inflection in areas such as China, where 50% of GDP is now coming from the service economy, this means that these champions or leaders have a much bigger opportunity set. Certain countries, such as India, are in effect, to some extent, bypassing that kind of manufacturing and moving straight towards the services. We know about the IT call centers. That's all part of the service economy. So taking those two stock examples, if I may, Ecolab and Verisk, those are names that we bought on the 20th and 26th of December. Good timing in terms of the markets. And Verisk is a data analytic company who I saw in the US last week when I was out there meeting 30 companies in 3 days. And Verisk does all the data analytics, particularly for the insurance sector. So if you have an accident and you're filing an insurance claim, Verisk can very quickly see is this a fraudulent case or not. So this kind of data, proprietary data set, is absolutely crucial for these sectors to make decisions. The other name that we bought is Ecolab, and they do all health and sanitization for restaurants, hospitals, the industrial sector, and clearly health and cleaning standards are rising and you need certification. And Ecolab have what we call the razor blade model. They'll sell one product and monetize more products through that. So again, very high recurring revenues, long-term contracts with pricing power. When you look at the performance of some of these service names like Verisk and Ecolab, they grew their revenues even in 2008. So that just shows the inelasticity of demand. In effect, these are necessities. Companies can't carry out their business without the kind of data that a Verisk provides or the health and sanitization of an Ecolab. So these are essentials. And that means that they're very resilient during downturns. They do have these long-term contracts. There are very few alternatives for companies to use. So their moats are very strong and they generate a lot of cash flow because there's little capital expenditure required for their business models. So low working capital, high recurring revenues, high cash flow, exactly the type of business models we like with those wide moats. So the service economy is clearly taking a bigger share of global GDP. We see a big inflection in emerging markets, particularly areas such as China, where services are now over 50% of GDP, and other countries like India, which have moved more straight towards the service sector, particularly around IT services, names such as Infosys and Tata. And then when you drill down, the opportunity for those resilient business models to hold up during downturns is an additional catalyst. And those names often grew revenues even in 2008. So they're absolutely essential to the businesses of their customers.